Tesla's stock has been in absolute meltdown mode, yet Elon Musk seems to be blaming everyone but himself. Tesla plummeted 15% in a single session, making it the biggest S&P 500 loser on Monday and for 2025 so far. It has been on a free fall pretty much all week. The numbers are brutal, down 15.43% on Monday, followed by another 3.22% after hours. And yesterday was pretty brutal too, with the Tesla stock now trading at around $238. We have to remember that at the beginning of this year, it was trading at around $400. The stock has now fallen a staggering 45% in a short period. This is likely the fastest and steepest decline in the company's history, or at least in a very long time. The sell-off has been relentless, and one major factor appears to be Musk's increasing political involvement, which has become more divisive. Many investors are frustrated with Musk's actions, though he still has die-hard supporters who stand by him. But when a CEO is this deeply involved in politics, it's bound to affect a company's reputation and sales, especially when appealing to a broad customer base. Also, one of the biggest news from today is that Tesla sent an unsigned letter to U.S. Trade Representative Jamieson Greer, warning that new tariffs on metals would raise production costs for American automakers, Daily Mail reported. The letter, posted on a public comment forum for Greer by one of Tesla's in-house lawyers, reflects the company's growing concern that U.S. trade policies could unintentionally hurt domestic businesses, according to the report. Tesla frequently shares unsigned public comments, but some speculate that CEO Elon Musk may have been involved, given his close relationship with then-President Donald Trump, Daily Mail noted. In the letter, Tesla stated that U.S. exporters are inherently exposed to disproportionate impacts when other countries respond to U.S. trade actions. The company also pointed out that past trade actions by the United States have resulted in immediate reactions by the targeted countries, including increased tariffs on EVs imported into those countries, Daily Mail reported. Also, adding to the concerns, Tesla insiders, including board members, have been selling shares. This isn't just retail investors. People inside the company are cashing out. Insider selling at this scale is never a good sign and only fuels uncertainty about Tesla's future. James Murdoch, son of media mogul Rupert Murdoch and a Tesla board member, has just offloaded $13 million worth of Tesla stock. If that wasn't concerning enough, he's not the only insider cashing out. As Fred Lambert from Electrek reports, Murdoch joins a growing list of Tesla executives dumping shares. Kimball Musk, Elon's own brother, along with CFO Vaibhav Taneja and chairwoman Robin Denholm, have all been selling off significant portions of their holdings. When top executives start liquidating like this, it's usually a sign they see more trouble ahead. Beyond the financial turmoil, Tesla is facing mounting public backlash. Protests have been intensifying across the U.S., with demonstrations growing in size and aggression. Over the past weekend, protesters took to the streets in major cities like New York and Chicago, some of them even getting arrested. While many of these protests have remained peaceful, some escalated into vandalism, with Tesla storefronts being defaced and Cybertrucks reportedly set on fire in Seattle. Law enforcement has been deployed to protect Tesla locations as tensions rise. Elon Musk, however, refuses to acknowledge any responsibility. Instead, he insists the protests are a coordinated attack by political opponents rather than a genuine reflection of public dissatisfaction. Rather than taking accountability, Musk claims activist groups, many with Democratic affiliations, are orchestrating the demonstrations to undermine him. He specifically called out organizations such as the Disruption Project, Rise and Resist, Indivisible Project, and the Democratic Socialists of America, even naming figures like billionaire investor Reid Hoffman. Hoffman fired back, calling Musk's accusations completely false. He denied funding any protests, condemned violence, and pointed out that the outrage against Musk is the natural result of his own actions. It's easier to explain away their anger than to accept that actions have consequences, he stated, a remark that perfectly sums up the situation. Musk's refusal to take ownership of Tesla's declining reputation and rising protests suggests he's more focused on assigning blame than fixing the issues at hand. Futurism reports that Elon Musk is on a mission to track down a so-called mysterious billionaire he believes is behind the growing public hostility toward Tesla. But as the article puts it, the call is coming from inside the house. Meanwhile, Electrek points out that the long-rumored Tesla killer has finally arrived, and ironically, it's Musk himself. For years, analysts speculated which rival automaker would dethrone Tesla. Would it be a major legacy car brand or an emerging EV startup? Well, the answer turned out to be BYD, which is now matching, if not surpassing, Tesla's global EV sales. Although BYD vehicles are largely absent in the US due to high tariffs, they're thriving in markets like Mexico, Australia, and New Zealand. But at the end of the day, Tesla's biggest threat hasn't come from the competition. It's come from Musk's own erratic behavior. His increasingly polarizing political stances, including support for far-right parties like Germany's AfD, have alienated large portions of Tesla's consumer base. Yet, instead of reflecting on his role in Tesla's struggles, Musk continues to blame external forces. In an interview earlier this week, Musk was asked how he's managing his other businesses amid Tesla's chaos. His response? With great difficulty. He looked visibly shaken, even on the verge of tears. When pressed on whether he's pulling back from his ventures, he insisted he's committed to making government more efficient and eliminating waste and fraud. But he didn't sound entirely convinced himself. With his deepening political ties, including an estimated $300 million in contributions to the Trump campaign, investors have every reason to be uneasy. The numbers make it clear, Tesla's brand is suffering. When a CEO wades this deep into politics, there's always a risk, and Musk is learning that the hard way. Unlike most executives who keep their political views behind closed doors, Musk has been loud and direct about his affiliations. He didn't just donate, he became an active player, moving fast and breaking things in the political sphere. Now, as Tesla's stock plummets and public sentiment turns, it's obvious that his actions have consequences. This week has been rough for Tesla. The price of the stock has fallen to around $250, and even though today we saw a decent uptick, it's still not enough. Having said all of that, let's talk about some good news for Tesla. Elon Musk has announced plans to double Tesla's U.S. vehicle production within the next 2 years, attributing this ambitious expansion to the supportive policies of President Trump and his administration. Musk described the initiative as an act of faith in America. Standing alongside Musk during the announcement, President Trump commended the decision, stating, "It's a big deal." A key component of this expansion is the introduction of the Cybercab, Tesla's forthcoming self-driving vehicle devoid of a steering wheel or pedals. Designed to function as a robo-taxi, the Cybercab is projected to enter production in Texas by 2026 and is expected to be priced under $30,000. The Cybercab represents Tesla's commitment to advancing autonomous driving technology and making it accessible to a broader market. Its anticipated affordability and innovative design underscore Tesla's strategy to maintain its leadership in the electric vehicle industry. This initiative aligns with Musk's vision of transforming urban transportation and reducing reliance on traditional vehicles. Overall, Tesla's plan to amplify U.S. production and introduce groundbreaking models like the Cybercab reflects the company's dedication to innovation and its responsiveness to supportive governmental policies. These developments are poised to strengthen Tesla's position in the competitive electric vehicle market. Further enhancing its technological capabilities, Tesla is collaborating with Chinese tech giant Baidu to improve its advanced driving assistance system in China. This partnership aims to integrate Baidu's precise navigation maps with Tesla's full self-driving FSD version 13 software, enhancing the system's understanding of Chinese roads and addressing user feedback. This initiative not only aims to improve Tesla's product offerings, but also helps the company navigate regulatory challenges in the Chinese market. Also, if we talk about predictions, on December 17, 2024, Mizuho Securities upgraded Tesla's stock rating from neutral to overperform, more than doubling its price target from $230 to $515. This optimistic outlook was attributed to anticipated regulatory support from the Trump administration, particularly concerning Tesla's autonomous driving programs. Looking at all this, I can say that in the long term, the Tesla stock might not suffer so much. But considering everything that's been going on, the next couple of weeks, or perhaps even months, are going to be very harsh for Tesla. Do you think the stock can rise from here? Or do you think it's going even more downhill from here? Let me know your thoughts. As always, please don't forget to like the video, leave a comment, and subscribe to the channel for more updates.